5 years after China suffered a violent earthquake in Sichuan province in 2008, on April 20th, 8:02 a.m., the Lushan County of the province suffered yet another magnitude 7 earthquake. The disaster has already caused over 190 deaths and tens of thousands of injuries. The local economic losses are too great to count. According to the 21st Century Business Herald, after the earthquake happened, China's insurance companies immediately started to mobilize insurance claims. Statistics from the China Insurance Regulatory Commission show that by midnight of April 21st, China Life Insurance, China Pacific Insurance, Ping An Insurance, and New China Life Insurance have all been compensating at $1.2 million in payoffs. China Life Insurance provided a $32,000 accident insurance policy for every journalist, medical worker, and police officer who'd been working in the disaster-affected areas. China Pacific Insurance also announced that it was offering an $80,900 accident insurance plus $3,200 medical insurance to every journalist. Ping An Insurance also offered a 7-day short-term accident insurance policy worth $32,000 to journalists and volunteers who were participating in earthquake rescues. These insurance companies announced that any medical care expenditures caused by the earthquake would be fully compensated and canceled medical care services limits at the designated hospitals. For incalculable property losses, insurance companies may compensate up to 80% of pre-estimated reparations. When these insurance companies rapidly responded to the earthquake, the huge gap between insurance compensations and these companies' donations to earthquake disaster region attracted people's attention. On the 21st of April, one day after the earthquake, the 4 insurance companies announced a donation of over $9.5 million, far more than these companies' insurance compensation payouts. So how exactly did that happen? As the 21st Century Business Herald points out, for many of the domestic companies' insurance products, such as accident insurance, auto insurance, and even household property insurance, these insurance products are rarely compensated in the event of a disaster. As a market insider told the 21st Century Business Herald, the fierce insurance market competition could only get them meager profits, which makes them hesitant to try to compensate people's and enterprises' exorbitant earthquake losses. However, for other types of disasters such as fire, storm, typhoon, and landslides, insurance companies do compensate. The reason, as market insiders point out, is that the economic damage caused by an earthquake is tremendous. It could cause billions or tens of billions worth of damage, and without the catastrophe insurance mechanism, a system that allows for federal compensation of financial losses caused by catastrophes, insurance companies would surely go bankrupt. So far, Chinese government hasn't implemented a policy to cover huge financial losses caused by catastrophes. Looking back at previous natural disasters, the Chinese government undertook major financial losses through national financial support. Many insurance practitioners are now appealing for the government to establish such a system. Don't go away, because up next we'll look a bit more at the compensation policies after the earthquake. Stay tuned.